let's start off with that. It's a small stock, but let's start off with that question to Mayuresh Joshi, fund manager at Angel Broking. He joins us right now on the show. Mayuresh, good having you. Thanks so much for joining in. Selectively, would you look at real estate at all, or is it a blanket ban on almost all the real estate names?
Morning, Neeraj. I think if I need to dissect the real estate market, I think three more or less regions come into play. So North India, South India and the western part of the country. So North India, more or less, the supply is quite humongous. The pre-sales are simply not happening. The inventory levels have got stacked up to all-time highs. The leverage of a lot of companies within the Delhi NCR regions are high. So again, I think I'll avoid companies operating out of North India. When it comes to South India, I think there is this localization effect. So I think the Bangalore-based companies and all the companies based out of Bangalore is where the focus lies. But clearly, I think one really needs to be stock-specific within these companies. So if I have to pick and choose within this set, I think Prestige Estates is something that I would still consider on declines. I believe that the projects that they've got in their pipeline are quite robust. Their commercial set of business also looks quite decent, and again I think valuations are looking quite reasonable as well. So Prestige is something that I'll probably look at on declines, and when it comes to the western part of the country, probably something like an Oberoi and Godrej is something that we've always considered. But clearly I think one needs to really understand how the inventory built up is happening in this side of business as well. The number of registrations that we are looking at, I think they're looking interesting, but again I'll wait for decline. So nothing aggressive at this point of time, but very, very stock specific when it comes to the real estate bank.
Yep. The other one could be Siemens. I like the way Darshan spoke about it, that he doesn't remember the last time Siemens managed to surprise us this way, and really good operational performance, really good bottom line. Mayuresh, it's been chalk and cheese for cap goods, but there are 2 or 3 names which have stood out really in terms of performance, and Siemens could well be top of that list. Assuming that the stock does react well today, my point is, for an investor, is this an opportune time to get into an MNC cap good company like Siemens?
So clearly, Neeraj, I think specifically in terms of Siemens, I think you need to look at a largest time horizon, and the logic behind this is on 2 folds. I think the kind of expectations of order flows that one really can expect from the dedicated freight corridor, which can be to the tune of 6,000 to 7,000 odd crores overall in terms of market buy. I think Siemens in terms of signaling systems can get a major chunk of those orders. Secondly, I think if you look at their composition, 55% of their net imports actually come through, and again I think in terms of the euro depreciation that we've seen over the past few months, the margin expansion was expected to be quite evident. Now I think, how does the order book stack up for Siemens? I think in terms of book-to-bill revenue visibility, it's around 1.1, 1.2 times. So for a significant re-rating for the stock to happen, it has to deliver in terms of getting more orders. The execution has to be more robust, and clearly I think across business verticals, I think you need to see more traction come through, specifically from the power side. The expectation is, with the government thrust on power sector and the power sector reforms that one really expects, you might see some amount of order flow coming through. And even on the international side, in terms of circuit breakers, in terms of power transmission orders, you might have some transmission come through when it comes from their parent company itself. So clearly I think if one really has a view of 2 to 3 years, declines can be a good opportunity for Siemens. If you don't have that time horizon, probably I think the stock might disappoint, though I think the reaction to the stock today might well be positive.
Okay, Mayuresh, stay with us. Lots more to chat about. For now though, we're going to take a very quick break. Come right back, continue our discussion with Mayuresh Joshi. Back with the market, right here Niti now. The SGX Nifty is indicating now a bit of a softish start. It started off flat and just inching just marginally lower from there. But let's go across to our technical experts, get in some trading ideas where you could make money. Ashwini, what's on your list right now?
See, Repco Home did fairly well, even Blue Finance did well. Housing finance continues to outperform, so this is a buy with a stop of 730, target of 775.
Okay, so that is one more idea from Ashwini Gujral. and do watch out for Repco Home Finance in the session today. That could be an interesting one. I think home finance companies haven't had a really bad list outing really the last few days. Ashwini, what else aside of Repco Home Finance? Because there is also a Welspun Corp that you are indicating a buy, and if it reaches these levels, it will be a fresh 52-week high for Welspun Corp.
Well, it's not doing as well as Welspun India, but consistently making higher lows and higher highs. So this entire group is in some sort of bull grip. So this is a buy with a stop of 146, target of 161.
Ultratech Cement, Prakash, you've got a bullish call there.
Oh yes, Ultratech Cement certainly is looking good to me. It's formed a good base, and in fact it's generated a buy signal. I think Ultratech Cement can climb to levels to 3,300, stop below 3,156.
Okay, so those are some specific ideas as well in the session today. Now watch out for some of the interesting movers in trade. And Mayuresh, I'm just wondering what's the call that you're giving out to your clients on IT right now, because IT is having a fairly decent outing. Cognizant numbers have been very good, which would mean that the stocks will react today. If your client calls you this morning, would you still recommend a buy on any of the large 4 or 5 IT names?
Oh yes, Neeraj, and again I think the call is long drawn, so I think we're not looking at a time horizon of less than a year to say the least, and the logic is quite clear. I think Europe is still recovering, the US markets have shown resilience, so in terms of client additions, for a lot of companies within the top tier space, they've actually done well. Clearly in terms of constant currency, we're expecting a decent growth going forward for the top tier IT names, and though there might have been hiccups in this quarter's numbers, specifically on the EBIT front related to wage hikes and visa costs, I think these effects are not permanent in nature. So as the discretionary demand picks up and it starts improving over the next few quarters, both in terms of the US region and the Europe region overall, our take is that constant currency growth should be quite stupendous for the top tier names. So Infosys, HCL Tech, TCS is something that we like. We continue to like that. I think it becomes good opportunities for long-term investors to actually accumulate these stocks.
Okay, let's quickly then bring on board Darshan as well, talk about the latest CLSA report on pharmaceuticals. And Darshan, more concerns coming in there? Or does it seem like the ride could get smoother from here perhaps?
So it's a different kind of note, it's a more of a future projection and what could be the future for pharma companies. It's a big 120-page note in which they've spoken about, the future of pharma. First of all, they've upgraded Cadila Healthcare to an outperform from an underperform and raised the target price to 2154. They've also raised the Cipla's target price to 683, but they've maintained a sell. But their top 2 picks are Dr. Reddy's and Sun Pharma. Again, today they've come out with a very strong note on Dr. Reddy's. What they're saying is that, over the past few years, Indian generic companies have had a good run in the generic market in the US. But right now, they're saying it's time to move into more complex and specialty products if they want to keep the momentum going. So they're saying that top 2 themes are Sun Pharma and Dr. Reddy's at this point of time, and the products that they've launched over the past 3 years, complex products by Sun Pharma and Dr. Reddy's, they have actually delivered strong results. So they're saying it's time for the other companies to also go ahead with it. So Sun Pharma's net sales contribution from these complex products currently to sales is close to 8% and 16% on the bottom line, and they believe by 2020 it will reach 16% on the top line and 26% on the bottom line. For Dr. Reddy's, it will rise from 13% to 33% till FY20. They're saying that Lupin has already covered some distance to acquisition. Cipla, they're saying it's a tough road ahead, but they will have to actually go ahead with some kind of M&A partnerships to go ahead with it. And Cadila, they're upgrading it on the reason that it has a very strong differentiated product pipeline which could play out for the company. So overall, it's a very good note, and they believe that over the next 3 or 4 years, complex products could something that could drive Indian pharma going ahead.
Right, Darshan, we're going to leave it at that. In fact, stick it with the pharma theme. Here's a word coming in from Dr. Reddy's. The stock, remember, is at a life high. A good show in the first quarter financials has only helped the investor sentiment too. The management told ET Now that the slow pace of US FDA approvals may actually improve going forward.
Product approvals, it is true that it's been somewhat slow, and that's why we have a weak period, especially this year in terms of product approvals. In the first quarter, there's essentially been none. Right, so and that's going to continue. But I think if you look at especially the introduction of Jidufa, so post the introduction of that, those products, are The rate of approval has been going quite all right. It's the products which have been filed before that that's causing a little bit of a concern, in terms of that. So I think over a period of time, things should look good in terms of approval rates and also the products that we are launching in the US market.
Mayuresh,
No, go ahead.
No, just a follow-up question on pharmaceutical. Mayuresh, for the moment, pharma stocks are no longer occupying the pole position. Both Sun Pharma and Lupin are off by about 15 to 17% from the recent highs. Is the best behind pharma, or this is a good time to revisit pharma?
Morning, Nikuj. I think clearly if you look at the pharma space, I think they've done exceptionally well over the past few quarters, but it's time to get stock specific within the pharma universe. We had strong buys a few quarters back on Dr. Reddy's, Sun Pharma, Lupin, Dishman. I think except for Sun, which had its own inherent issues, the profit warning which has come through, our take is Sun is still best placed. Clearly, I think integration issues will overrule the stock for the greater part of FY16, but if you're looking at FY17 beyond, I think the kind of ANDA pipeline that Sun Ranbaxy as an entity would have is quite stupendous, and clearly I think the EBITDA margin expansion would be evident second half of FY17. So I think valuations are looking extremely attractive. To the short-term pain would be there on the stock. Sun Pharma, in our opinion, can give recent growth both in terms of earnings and again valuations looking very, very attractive.
Okay. So that's of course pharma, and maybe some of these are MNCs as well, because the spotlight for today is clearly on the MNC stocks, 3M in particular, but just look at MNC stocks and what some of these did yesterday. So yes, Nestle was the big story, but look at Blue Dart for example. Stock up 4%, delivery percentage 62%. P&G up to 2.5%, delivery percentage 62%. United Spirits up 4.5%, delivery percentage at about 50%, and this is amongst the higher side that United Spirits has the delivery percentage at 48%. Nestle, that big MNC that we were speaking about yesterday, up 7.5%, not the most optimum delivery percentage. Yesterday a lot of trading would have happened as well, but really interesting moves coming in for Nestle too, and we'll talk about Nestle in a bit. But just the fact that 3M India, we don't talk much about this, large MNC, stock closed in at life highs yesterday, extremely strong volumes, delivery percentage at 61%, and there's reason to back it. We talk about a lot of MNC stocks finding favor just because they are MNCs, but in the case of 3M India, results that came out just 2 or 3 days back actually make it a fundamental cause as well. Sales up 12%, EBITDA margins up 300 bips, and PAT up 55% at 40 crores. It's a small base, it's not a very large subsidiary right now, and which could be interesting, right? I mean, you look at MNC stocks which have very large market cap, and then you get deterred at how much more can it grow. This is a large giant, Fortune 500 if I'm not wrong, and doesn't have a really large subsidiary in India, and has products which almost every Indian can use on a daily basis.
Yeah, the products, I mean, it's amazing. You were just highlighting the range of products that they make.
So 3M is an innovator company, I think one of the best global innovator companies, and their products, they touch across categories and they really touch our daily life. We just don't realize that. The problem with 3M is liquidity and valuations. It is trading, I think, at a P multiple of 70 times plus 2 year forward. So that makes it ridiculous. I can't be wrong with that number.
Yeah, 66. So last year, you are right. Last year, these were the valuations. After the numbers that have come out the last 2 or 3 quarters, I think the valuations come down to a slightly moderate 50 times FY16.
But even then,
but it is expensive.
Yeah.
Yes.
It is very expensive.
Yes.
But the broader point here is that markets are still not shy of buying these expensive stocks. We thought that, oh, it's time to really put these expensive stocks aside and time to revisit those cyclicals and industrials. That ain't happening. Asian Paints yesterday hit a 52-week high. Eicher Motor is back above 20,000. 3M or a Blue Dart, or that matter what is happening in a Nestle. So it's not that expensive stocks or 4-digit stocks or MNC stocks are off the radar now. So this is a very good looking market what we are staring at right now. And market action, it's not just, so Nifty is not telling you the real picture. I think 9,000 is still high watermark for the Nifty, but stocks across the category are moving up now.
Yes, they are individually so, but let's take a look at what else could be in focus today. Of course, Cognizant has been one such name to watch, and we're going to see whether or not there continues to be a rub-off on the IT pack, considering they held out so smartly yesterday. We'll also be watching out for what Adani does, considering the Australian court has now rejected the green nod to the $16 billion Adani project. So this could be a bit of a setback and a sentiment negative maybe for Adani group of companies. Yes, like I said, Cognizant, so watch out for all the technology names. Infi, Tech Mahindra in particular, considering the ADRs have had a very big move in the overnight markets in the US, so watch out for that as well. Bata could be a very interesting play, and along with the numbers, they've just announced that they're going to focus now on e-commerce, so this could be a big value unlocking story perhaps for Bata. Look out for this stock as well. And of course Tata Power, which is going to pursue expansion of their Mundra UMPP as well. Couple of these stocks in focus.
And a bunch of earnings. I think the market will be keenly watching out for what Arvind or Motherson Sumi and some of the others do. They are strong stocks of late, so do watch out for those. You will hear all the managements on ET Now today. Motherson Sumi would be joining in at 2:45. There is Marico, which will be joining in as well later on in the show, so do watch out for these. But for starters, the SGX Nifty, pull that one up for our viewers once more, just to give you a flavor of what is it that the markets could be doing today. Might be a slightly tepid start. The day post, 2 days post the policy, and watch out for individual movers in the session today really. But here come the first rates on the Nifty, and in all probability they will be slightly soft. So the Nifty is starting off 8596. No, the Sensex is a more believable indicator really. Look at the Sensex, 35 points down, and this may well be the kind of trade that we have. Too early to say, but let's see what's moving on the Sensex. The names include, well, maybe an SBI which has a marginal downtick, GAIL, ICICI and BHEL. These are the stocks which have some upticks to themselves. That's about it. It's a fairly flat start. L&T marginal downsides, and TCS, Wipro, Infosys and Wipro ADRs were up and active yesterday after Cognizant numbers. Maybe, just maybe, there could be some fireworks in the large cap IT space. I don't think Infi will have a 1.5% downtick. Do watch out for that stock. And lastly, just watch out for Siemens before we mark the currency as well. Siemens should come up on your screen. Very good numbers, just about 1.5%, so not a big bang reaction. Let's see if this changes.
I want to see what Balaji Tele is up to, whether or not you see a continuation of the move on that one post their breakup with Star. That stock should come up for you on your screens, and well, locked in another 20% circuit today too. Reliance Infra, considering the Himachal Pradesh government has reallocated hydro projects to the company, so this should start off well in the green. Rel Infra up by about 0.6%. Good to see that the currency continues to strengthen, very marginally so, but you're seeing another uptick coming in, 63.76 for the currency right now. Flattish moves there, but it continues to stay around that 63.75 odd level, so good to see a stable currency at that. You've also got Siemens, and Neeraj of course reviewed the stock as well. And let's see what that is up to currently in trade. A nice move up by about almost 1.5% on Siemens. Couple of other stories like a PTC, Camlin Fine, Brigade Enterprises, GSK Consumer, they should all be reacting to their numbers as well. But Ajay joins in to tell us the 3 stocks that could be moving in trade today. Ajay, what's the D Street chatter?
Good morning, Aisha. Aisha, the market was pretty strong in yesterday's session, but surprisingly this morning I've gathered more sell calls from the dealers. For example, Arvind is one number which will be released in today's session, and the analysts and dealing guys believe that Arvind actually could post a muted number, and hence is a sell idea for our intraday basis. Even select large cap PSU banks have become a sell idea. In fact, last hour of trade they did see institutional guys say that there were profit taking kind of orders coming in from some of the funds. So watch out for SBI at higher levels. It is likely to witness some profit taking by the guys who have been accumulating in the last 6 days. On the buy side, Ramco Systems, that company released their numbers yesterday, and 9% kind of a sequential revenue growth has been posted, which is one of the highest performance. 3,000 crore market cap, watch out for that one. Some fund buying is expected to come in after this kind of a performance they have posted in the first quarter.
Okay, that's interesting. Let's see what Ramco Systems does in the session today, but I think near about its all-time highs, 9% quarter-on-quarter growth is not bad. And remember, it's not a tiny 100 crore company now. The market cap is northwards of 1,000 crores. So interesting quarter for them, 3% higher as we speak. But I think 9% quarter on quarter is really, really good, even for a mid-cap IT company. It's a good going really for Ramco Systems. The Ramco Group, by the way, Ramco Cement too, is not doing too badly. I think the other interesting space that my eyes peeled for today is the textile space, because two interesting names join in. I think both of them have come out with fairly decent numbers as well. Mayuresh, we talk about exporters. Somehow textile companies are right up there in terms of stock market gains, be it a Welspun, be it an Indocount, KPR Mills, Himmat Singha Seed. Almost every company which is in the textile space has done well. Any standout performers for you?
So clearly, Neeraj, I think we do not track this space that closely, but again, Arvind's number is something that I'll be watching out very, very closely. The management had indicated in the quarter gone by that the brands and retail part of the business is expected to grow quite decently from 30% in terms of revenue share to 36%. And if this really takes place, I think the return ratios will see a marginal uptick for FY16, but FY17 I think those numbers will start looking better. The e-commerce initiative, the Gap stores that they are opening might probably take a toll in terms of how their margins pan out for this quarter and the next, because I think 6 stores expected to open this year, another 12, 14 expected to open in FY17. So clearly I think how Arvind plans its business model around the denims business, the women apparel business, the brands and retail specifically to do with Gap, the Nautica brand which is expected to come through as well. I think I'll be looking out for this stock. So I think valuations at the current level a little bit too high in my opinion, but if it corrects significantly, I think Arvind from this space overall is something that I'll probably look out with a 2-year perspective.
Right, Arvind is at 309. I just want to visit United Spirits, and United Spirits, what a wow Wednesday it was for United Spirits. Analysts are gung-ho about what India's biggest liquor company could do post the analyst call. Mayuresh, if I look at the P multiples for United Spirits, it's expensive, super expensive, because growth is not there. But is it fair to assume that United Spirits should be part of everyone's portfolio?
So clearly, Nikunj, I think we do not cover it, so as a disclaimer, I think I'll not be able to comment on this stock. So unfortunately, I think I do not have a target for United Spirits.
You like Britannia, and you've liked Britannia. At 3100, is Britannia priced to perfection?
So clearly, Nikunj, from a valuation perspective, trades close to 36 odd times FY17 numbers. And again, I think our take has been it should form part of your portfolio if you bought it at lower levels. I think on 2 counts. One, I think the ROCs have shown tremendous improvement from lower levels to around 54 odd percent. The ROEs are at a very decent level at 54 odd percent as well. If you look at their cash conversion cycle, they're sitting on a decent cash at the current juncture. And again, I think if you look at the cost optimization efforts that are probably going on, I think the margin expansion, I'm not of the opinion that the margins would stay at 14.5%. They've been aided by too many factors in this quarter's results. Low raw material prices, lower freight costs, lower fuel costs have probably aided and propped up margins. But again, I think some decent margin expansion has to happen with the cost optimization plan they've got, the premiumization story when it comes specifically to their cookie biscuit market. I think that story will still play out. So in my opinion, I think investors who have bought the stock at lower levels should continue holding on to Britannia, though I think valuations at the current juncture do not warrant a fresh buy at the current level.
Well, let's see what else is looking active then in trade right now, and just bring up some of the nifty movers then for you. IT, of course, is holding out quite smartly. So you've got a Tech Mahindra, 8cell Technologies, Infi, TCS, Wipro. That entire sector is looking pretty smart. Hindalco, Vedanta as well, not looking all that bad. You've got a Lupin, ICICI Bank, ONGC, Reliance, tempered moves coming in there. And on the losing side, you've got a couple of these PSU banks. The likes of a PNB, BOB is your top loser, about 1% in the red. Mayuresh, what is your sense on this entire PSU banking rally which was in place? Got challenged yesterday. Does it seem like this was just a trading move post the recapitalization news?
So Actually, clearly, I think they reacted very, very strongly after the recap news came through. But again, our take has been the internal flows are still expected to be soft and muted over the next few quarters. The banks have consciously gone slow on their credit growth, single-mindedly focused on recoveries and asset quality. And clearly, I think if the capex cycle does not take a U-turn over the next few months, I think the stressed assets, specifically in the iron and steel portfolio, the real estate portfolio, the sugar portfolio, the infrastructure portfolio, the elongated working capital requirements thereof, I think they are still going to take a toll in terms of how the asset quality pans out. So though you might see slower slippages happening, asset quality actually stabilizing in terms of how the restructured portfolio pans out, our take is that the internal flows will still be weak for a lot of these PSU banks. So the valuations look extremely attractive for the whole host of PSU banks. I think State Bank is something that we're still comfortable with. Any decline onto this stock becomes a good opportunity, but the private space is something that we'll still continue to remain optimistic about, more to do with all these three factors: capital adequacy, asset quality, and the simple strength of branch network, which probably gives them the ROE and the ROA expansion.
Okay, so that's some more views on banks as well. Now let me just look at the first 8 minutes gone by and what's doing well on the Nifty, or what could do well when the markets open. IT clearly might just have a decent enough start. Ashwini, 2 or 3 large IT names. I just want to see if you have a buy call on any of these. HCL Tech Mahindra might open about 1% higher, and I think Infi and TCS too, northwards of 0.75% is what the pre-open is indicating. Would you go out and buy any of the large cap IT names?
Mid-cap IT looks better than large-cap IT, but even in large-cap IT, I think Infosys we've already spoken about. Tech Mahindra is looking forward to a rally towards its 200-day moving average. So basically all of IT space could easily go for a 5 to 8% type of rally, but clearly the action will be in mid-cap IT more than large-cap IT.
Just to bring that point on how powerful the performance in the mid and the small cap spaces, the mid cap index in this year, Nifty and Sensex has been flat. The mid cap index in this year has actually appreciated by about 12% plus. A stock like Indiabull Housing Finance in this year has given you an appreciation of about 70%. Britannia not far behind, it has given you an appreciation of 71%. So whereas Nifty is not really telling us the real picture, in any market mid cap stocks they tend to outperform the individual stocks which always do well, but as of now there is serious amount of vibrancy, excitement and movement which is really visible in the mid cap space. And typically when mid cap stocks, when they jump around, when they tend to get excited, that just tells you crowd believes that the downside for the market is going to be limited. Mayuresh, I'm picking some of the stocks you track. So I've discussed Britannia with you. You also track as house Indiabull Housing Finance at 700 rupees. How is the stock looking?
No, clearly, Nikunj, I think we did like both these stocks, Indiabulls and LIC Housing, but again at 700, I think it does not warrant a fresh buy. I think it encapsulates a lot in terms of the earnings outlook will pan out over the next few quarters. So again, I think no fresh buying, at least for this stock at the current juncture. LIC Housing, I think some steam left, and we're very close to our target price of 553 from the current levels. But again, I think the underlying theme for a lot of these housing companies would be with interest rate cuts happening, their cost of funds come down, the yields probably sustain, with improved macros, the asset quality pressures start easing off. Their cost to income ratios are quite decent. So I think all the valid parameters that one probably looks at in terms of checks and check boxes, I think they get ticked. But I think valuations remain on the higher side. So I think LIC some steam left, but Indiabulls I think again close to high valuations, and again no fresh buying at this point of time.
Mayuresh, so give us one top stock idea that you're working with.
In fact, a couple of ideas, Aisha. Inox Wind is something that we are liking. Our belief is that quarter one results were exceptionally good. If you do a chart check and a year-on-year comparison, I think numbers were better because quarter one is supposed to be weak. Our take is that with capacity expansion happening for Inox Wind in the second half of this year, earnings CAGR of 48% over the next 2 years is not ruled out. Margin should sustain between that 17.5% and an 18.5% kind of a range over the next 2 years, and with improved order flows, Our take is that the margin expansion would be quite evident. No royalty on the books from FY16 onwards. And again, I think the motor blades that they're looking at in terms of rotor blades, the diameter size, the selling of that would increase from 93 meters to 100 meters, which also aids margin expansion. So valuation is looking attractive at 13.5 times. The second stock is MBL Infra. I think we basically like the EPC theme, and our take is that with the BOT projects coming on stream for MBL Infra, and with 70 crores required in terms of fund infusion on the equity component of one of their BOT projects, that can easily be sufficed from internal cash flows. And again, on their standalone EPC business, it's supposed to do exceptionally well with 2,500 to 3,000 crores of orders expected to come through. EBITDA margins expected to stay in the range.
Okay, Mayuresh, thanks for those ideas as well. Just stay in for some final thoughts really, but we'll get in some technical ideas just before the market starts. Ashwini Gujral, your top trading idea for the day today.
Well, CEAT remains a top sell with a stop of 1025, target of 940.
It was an STBD yesterday at 1004, so do watch out for this one. Now, what about you, Prakash? Your top trading idea for the day today?
I think I like Wipro. That certainly is looking good to me. Strong support at the levels of 560, can climb to levels closer to 585 zones. Wipro is looking good. I also like CESC. Seen a good up move yesterday, given a beautiful breakout at 585 zones. I think CESC climbing to levels closer to 610. Stop below 580.
Okay. 40 seconds to go, and well, we are working with okay set of global cues, but technology stocks will be in focus simply because of Cognizant numbers. It is a lead indicator of what is happening to the demand environment, and that is what you want to see. You want the demand environment to pick up in the second half of year. Cognizant is always considered to be a conservative IT company. They're very conservative when it comes to their forward-looking commentary, and if a conservative company is increasing the guidance, that will really augur well for the demand environment and for the observers per se. Mid cap is where all the action and all the excitement is. It's a long list of the mid cap stocks which you want to track, but just to point out that MNC trend which Neeraj identified, I think it's a very powerful trend, and that just tells you right now markets are not really shying away in buying some of the expensive and some of these big haloed MNC stocks. First rates for the day, Thursday morning on your screen are 16 points up for the Nifty, 74 points up for the Sensex. 16 points up for the Nifty, 74 points up for the Sensex. That's how major indices are off the block. 0.5% up for the small cap index, 0.25% up for the mid cap index. So again, they are outperforming benchmark indices, and they've managed to outperform benchmark indices by quite a margin, at least in last 8-10 trading sessions. You want to start with IT, especially large cap IT, Infosys and TCS, the real comparison with Cognizant. Thought as much, 1% up for TCS, and Infosys also is looking mighty excited. Tech Mahindra more like a telecom play, not a direct player. It could see a sentimental or a rub-off effect. Even Wipro is witnessing a rub-off effect. It now stands at 578 rupees. Nifty is flat, and benchmark indices are not going anywhere. Bata, the big one from the mid-cap space, they came out with disappointing set of numbers. My sense is result reaction would be immediate and imminent. It's there on your screen. 25 rupees off. Smart investors have checked in. Promoters have increased their stake in Balaji. Balaji yesterday was locked up, and I reckon that today again fireworks would be there. And there you go. Balaji is now almost a triple-digit stock. 99 rupees for Balaji. This one is trending up, and it is trending up very, very smartly. I want to also check on Dr. Reddy, which hit a record high yesterday, followed by Asian Paints, which is not far behind. And then let's pull up all those MNC stocks one by one. Nestle, 3M, Blue Dart, and again lot of action and lot of demand is clearly visible in some of those names.
3M India 10,100 is where it is. Nestle is seeing some correction after that big move yesterday, so it's down by about 1.5% or so. And yes, IT is your high flyer today. I also want to see what the Adani group of companies are doing, considering the Australian court has now rejected the green nod to their $16 billion Carmichael project. So watch out for the Adani group of companies. Ports and power and enterprises both down right now in trade. Tata Power, considering they're going to pursue expansion of Mundra UMPP. L&T has sought a shareholder nod to raise about $600 million. So watch out for this one as well. And some of the other names which are going to be in focus ahead of their numbers today. So Madison Sumi, Arvind, Bombay Dyeing, Bajaj Electricals, these could turn out to be some of the interesting ones. Madison Sumi going strong into its numbers, Bombay Dyeing flat, and Well, Arvind is the other one which should come up for you on your screens. That will be up on your screens just next. JP Infratech, Tata Global Beverages, these are some of the other ones that you may want to look out for. Prism Cement, wherein it's a net loss versus a profit of 13 crore rupees last time around. Just a very small base stock in case you want to check in on that. Snowman Logistics, wherein the net profit has shaved off by about 61%. So quite a bit of tumble, and this is a sequential number that we're giving you. 6.25% lower for Snowman Logistics. Disastrous quarter for them this time around. Ramco Cement, Vardhman Textiles, Ramco Industries, Brigade Enterprises, these are some of the other ones to look out for by way of an earnings reaction. Smart move coming in Ramco Cement. Brigade 7.5%, 8% higher now. This quite clearly is the star performer as of now. Maketa, a disastrous set of numbers, and that should be visible on the stock price as well. GSK Consumer, PTC India, these are some of the other earnings reactions.
Just two or three. One is I want to see what Force Motors is doing in the session today. I haven't had a look at the stock, but petered off a little bit yesterday. And oh yes, there is a further 5% downtick on Force Motors. Yesterday had a 10% intraday fall, another 5% down today. So after reaching meteoric highs, it's just correcting. I mean, the valuations or whatever you can call had breached astronomical highs really. So I think this was probably due. Difficult to call these things, but yeah, probably due. Two calls which have worked out, we'll just get to our experts as well, but I think SEAT is correcting. Remember, tire stocks too started petering down a bit, 2.5% down for SEAT. I think Union Bank and the PSU banks are the other set of stocks which we should point out, because the Nifty too is cooled off completely. Union Bank down about 1.5%. Bring up some of the other PSUs, the likes of Allahabad, BOB, PNB, etc. All of these should be interesting. And last but not the least, while the broader markets are still doing okay for themselves, bring up a Nestle and bring up a United Spirits. MNC names are also correcting a bit today. It's a morning of correction really. A lot of things are taking a bit of a step back. Not surprising. All the things which had run up quite substantially are seeing some major profit booking scenarios right now.
Balaji volumes are extraordinary. The price appreciation may not be extraordinary, but the volume action is quite extraordinary. As we speak, it is one of the highest traded counter, at least on National Stock Exchange. 98.5, 1.3 million shares. That's a big number for a stock like Balaji. Then you got MTNL. For some bizarre reason, MTNL, it's a 2-digit stock, so traders, the HNI traders, they take fancy to this one. But folks, nothing is happening there. They've lost the battle. They've lost market share. The core existence of MTNL, I think, is under threat now, given what is happening to the entire telecom space. They don't have any market share in any of the key metros where they operate. They're left with a couple of buildings, a lot of real estate which they're trying to sell from last 4 or 5 years. Nothing seems to be happening. And then it's good old Suzlon, which is at 27.2. Balaji volumes, Neeraj, that is the talking point.
You bet. It is moving. It's doing well today as well, with volumes not 20% up but 3.5%, which is good. And yep, Suzlon too, about 2 million shares traded already on the BSE alone, and that's quite steep really for Suzlon as well. But let's get in those initial thoughts from our experts. Actually, before we go to Mayuresh, Ashwini, you want to come in on SEAT. It's a good call. What does one do now if somebody initiated a trade yesterday in closing trades or even this morning?
It's showing follow through, which means the idea of going short is correct. So you have to stay in, because everybody who's long will now start to cut their positions, and given that the 200-day, 20-day moving average is at 800, it's got some way to fall. So given today's uncertain type of environment and mid caps not doing as well as previous days, this is a good day to try out some of these overstretched type of trades on the upside, where you could get fairly decent downside.
I want to check in on some of the initial rates coming in on the futures and options side of the market as well, considering, I mean, of course, Neeraj has already talked about the high flyers and as to how IT is moving up. Tire spaces are seeing some ebb off. Infi, Dr. Reddy's, they all made it to the gainers list. JP Power futures as well, holding up by about 1.5%. But well, guess what? It's Siemens, which is actually the top traded counter, the biggest percentage mover on the F&O gainers list right now, 1.6% higher for Siemens as we speak. Adani Enterprises is your biggest laggard. You've got a Bata as well in there. Bata Futures down 2.25%. JP Associates down 3%. This is also coming off after that, move that the JP group of stocks have seen off late. CEAT, like Ashwini just highlighted, that as well is a loser. And so are a couple of PSUs. So Union Bank as well as as well as a BOB are the ones which are the losers right now. South Indian Bank just about very marginal moves there. Biocon has started off strongly and smartly. 473 is where the stock is right now. And Jubilant Foodworks as well is not looking all that bad. So watch out for these stocks in trade.
Yeah, I would be waiting for commentary from Bata really. It's not surprising that the gross margins have come off because in order to clear up the inventory, they ran so many promotional schemes in the quarter that it was natural that the gross margins will come up. So you had a decent enough volume growth, but the operational picture was bad. I think commentary from the management with regards to what's happening to the ERP implementation and what happens ahead in the next couple of quarters would be the key thing. So buying may not return in a hurry to Bata India really. I think management commentary would be very, very crucial. Mayuresh, I don't know if you track Bata or no, but what are the thoughts here on Bata or maybe some of the other consumption names if you don't track Bata?
So clearly, Neeraj, I think the issues related to the supply chain and the SAP implementation clearly working on the numbers, and clearly, as you said, the inventory liquidation is something to also watch out. So I'll wait for management commentary on Bata. We did relax over within this space, but I think it's shown a humongous move. So again, at valuations, astronomical valuations, I think we don't expect the stock to give compounded returns year after year. So I think if investors are holding on to relax at lower levels, hold on. But again, I think this space looks fairly valued at the current juncture.
Okay, NBCC, how could I miss this one? It exploded, and NBCC exploded on Wednesday on strong volumes. Today there is little follow up through. Ashwini, NBCC indeed is a bull market stock. It is in a different orbit whatsoever. For someone who's not bought into NBCC at all but is now tempted to buy into NBCC, what is a good entry point?
From 700, there has 50% rally on NBCC. So definitely this is not a good time to buy it. The tragedy with NBCC is that it's a PSU, and sooner or later you will again get some divestment buzz, etc. That would be a time to get into NBCC. Maybe around the 200-day moving average. Once it gets there. But definitely don't try to buy it around this 1200 zone, because the problem is that even a 10% correction will look fairly steep from here. 200-day moving averages are about 880 to about 900. Any sort of correction to those zones should be used to buy for long-term investors. As far as short-term is concerned, I think it's had a breakout. If you can keep a 40-50 point type of stop, you can still buy it.
Well, it's metals, FMCG, PSU banks and media. They're your laggards in trade today. And mind you, media does not quite include Balaji. That stock is in its own trajectory. Pharmaceuticals, IT, energy and MNC. These are the indices which are holding up. Out of this, the big moves, of course, are restricted to pharmaceuticals as well as IT. What are some of the tire names doing? And CEAT, like we've been pointing out, that started off lower by about 2.25%. I also want to check in on what an MRF, JK Tires, etc. are up to, and whether they too are seeing some ebbing off. Sure enough, they are seeing some red coming in for them too. Mayuresh, how good a story is the entire tire pack from here onwards? Because the stocks have run up a fair bit. Is all the good in the price now, and is it time to really profit take?
So actually, from an FI60 perspective, probably I think the valuations are close to their fair valuations, and we did like the tire story at lower levels. So CEAT, JK Tire, MRF are all strong buys, but we are very, very close to our target prices. In fact, MRF has crossed our target price post their numbers. So clearly, I think the structural story remains quite intact in terms of ROE, ROC expansion, in terms of pure costing, in terms of cross supplies. The expansion would happen for a lot of these companies. Raw material cost aiding EBITDA margins. And again, I think the impact of Chinese imports is something to be looked out for, because a lot of managements have guided that Chinese imports are still coming into the market, and specifically into the replacement market where the margins are quite high. Secondly, I think if you look for the better part of this year, I think the top line growth is still expected to be a little sluggish in the single team. So I think for a structural re-rating for these stocks to happen, the demand from the OEM side has to expand exponentially. The replacement demand has to probably stabilize. And again, I think some amount of curbs, if put on the Chinese imports, I think that can have some amount of re-rating when it comes to earnings. But I think most of these stocks are fairly valued, specifically from an FY16 perspective.
Well, tire stocks today are correcting, and remember, some of the tire companies have come out with good shares of now, good numbers. Now, important flash on from CLSA and then Kagashi Motor, where I think promoters are likely to come back with an open offer. We'll try and look at some more details on that one. I may have missed the flash, but let's see. Let's wait for that update right now. Mayuresh, Tata Motors, on basis we discussed that what's gone wrong there. Is all the China bad news in the price for Tata Motors?
I believe so, Nikunj. I think, yes, I think China forms a substantial part when it comes to the GLR portfolio. But clearly, I think with the volume degrowth that we've seen and the correction in the stock price, a lot should get gestated in terms of how the margins would pan out. A, from the China business. B, I think the overall GLR margins. And C, clearly how the volume growth would pan out ex-China. So our take is that ex-China volumes have held out reasonably well for Tata Motors. And I think even on the Chinese front, there has been a mixed set of commentary across major. So if you look at commentaries from BMW and the likes, I think you're probably going to see some amount of pain still remaining into the system. But clearly, I think if you look on the consolidated basis and the kind of valuations that Tata Motors is currently deriving at, our take is that it is fairly valued from an earnings perspective. So our take is long-term investors can definitely look at Tata Motors. The domestic story should also start playing out meaningfully, though the domestic of the revenue is quite minuscule when I look at the overall part of things. But again, I think MSCV is seeing some signs of green shoots overall for the economy, and again, valuation is looking attractive. So yes, I think our take is Tata Motors looks very, very attractive. I think a lot in terms of the China news is getting into the price, but results is something that a lot of analysts would watch out for. If the results are much worse than expected, declines is the way to go about getting into the stock.
Mayuresh, good chatting with you. Let you go on that note. Thanks much for taking the time out and joining us as always. That's the view from Mayuresh Joshi from Angel Broking. But let's also get your status check on where we are. Well, flat as flat can be, 85.67 in trade, but lots of individual stocks moving. So Ashwini, what stocks have you picked out for us?